Welcome back. And before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, all consultancy offices and contracting companies are being urged to register for Dubai's new e-building control system before the end of February. The directive came from Khalid Mohammed Saleh, the Director of Buildings Department at Dubai Municipality, on Sunday. From February the 28th of this year, the Building Department of the Dubai Municipality will no longer receive requests for structural applications, completion certificates, temporary supply services, change of contractor or consultant, or deposit refund through the old system. And contractors and consultants will have to apply through the new one. Khalid added that after this date, the system will be enabled only for the trained companies. And a major refurbishment of Dubai International's Terminal 1 is due to begin in the first quarter of this year, which, when complete, will offer passengers a vastly improved travelling experience. This includes more efficient and streamlined baggage screening in the departures hall, the replacement of all check-in desks, the upgrade of baggage systems, and the modernisation of all public areas. The upgrade is expected to be completed by the end of next year. Assets of the UAE's sovereign wealth funds hit an all-time high of $451 billion at the end of 2012. That's according to the latest report. Figures by the Washington-based Institute for International Finance showed that off the back of strong oil prices as well as high oil output, the country's oil export earnings soared to their highest level of more than $124 billion. Assets of the Abu Dhabi Investment Authority and other sovereign wealth funds gained nearly $25 billion in 2012, allowing the UAE to maintain its position as having the largest sovereign wealth funds in the Middle East. Looking ahead, the report projected UAE sovereign wealth fund assets to climb to around $483 billion at the end of 2013 and $512 billion at the end of 2014. And in other business news, the US dollar weakened significantly in trading last week, dropping 2.04% against the euro and 0.38% against the British pound. US equity markets benefited from a weaker dollar and improving risk appetite to close at multi-year highs. With the European Central Bank holding rates unchanged at 0.75% at the end of last week, we earlier spoke with Gaurav Kashyap, the head of the DGCX desk at Alpari Middle East, for his take on what impact this may have on the euro in the weeks ahead.
This past week in trading has confirmed one thing for us, and that's that the euro has entered a very bullish trend against the US dollar. Fundamentally, if you look at it, we had the ECB rate decision on Thursday in which President Draghi said that it was a unanimous decision to keep rates unchanged. Now, obviously, there was a lot of speculation in the markets that the ECB would consider cutting rates by a quarter basis point to 0.5%. But the fact that he came out and said that it was unanimous that they were going to keep rates unchanged really saw that buying support taking the euro USD higher. Technically, also, if you look at it, the euro crashed through the 133.50 mark, which is a 200-week moving average. A very, very strong support level now is forming around those levels. And now we're expecting probably the euro to test those 135 levels in the weeks ahead. If we look at the Australian dollar also, a lot of buying support, positive buying support has taken that pair higher. It closed above 1.05, and once again this week we're going to look at that resistance level of 1.06 to be tested. We have a very, very busy calendar coming out from China at the end of the week. Remember, because of the Chinese trade relations with Australia, improving data from China will also positively impact the prospects for the Australian dollar. So we have Chinese GDP readings, we have industrial production, and we also have retail sales coming out of China, all of which are expected to be in line or slightly better than expected. So we're expecting the Aussie to also move higher to about 1.06. Overall, risk appetite will be on a high. We will see markets move higher. US equity markets will also continue to move higher, and we're expecting the US dollar to remain on the back foot this week.